Good morning and welcome to ForexTV.com's AM Forex New York. Today is Tuesday, February 19th. I'm Caitlin Sisney. The yen rose as write-downs at Barclays and Credit Suisse Group spurred investors to cut higher-yielding assets financed in Japan. The Japanese currency gained the most against the pound after Barclays reported a 21% drop in second-half profit, and Credit Suisse said write-downs will cut net income by $1 billion, curbing so-called carry trades. Yen is trading at 107.52. The UK currency declined after its government said it will take over the troubled mortgage lender Northern Rock, which took emergency funding from the Bank of England in September as a sudden surge in credit costs caused the first run on a British lender in a century. Sterling is trading at 195.11. Meanwhile, Euro is trading at 147.43. The National Association of Home Builders Wells Fargo Housing Market Index for February is scheduled to be released today at 1 p.m. The measure of housing developers' sentiment about the U.S. housing market is expected to inch upward this month, which would be a slight improvement for a troubled industry. Today we're joined by Bob Kozak from Alaron. Bob will give his outlook for the Forex market.
Good morning, Caitlin, and all your listeners out there. Let's take a look and see what's happening here in the currency futures markets overnight. Starting with the Aussie dollar. Aussie dollar up 165 at 91.97 after news that Central Bank Assistant Governor Malcolm Eddy has said that higher inflation may spur another rate increase after the Aussie dollar just went up to 7%. Again, carry traders liking the Aussie dollar. And again, another 25 basis points will make that more attractive, hence up 165 as we speak. Looking at sterling. Sterling right now at 194.77. That's down 74. Concerns that the government will announce a plan to nationalize Northern Rock PLC. Again, if you recall, that was the bank that did get in trouble due to subprime lending woes. Sort of taking a little bit of a tarnish onto the sterling right now, down 74 as we speak. Looking at Canadian dollar. Canadian dollar up 55. Let's just take a quick look why. All right. Our northern neighbor here, right, looking at interest rates, further interest rate cuts by the U.S. here on March 18th will at least spur some hope that we can stave off a imminent recession, if we're not in one already. But again, they will like that. Higher metal prices, I know overseas, we're adding some luster, especially gold. The gold up $15 right now, and higher oil prices will help that also. So Canadian dollar sensing a little rally right here this morning, up 55 as we speak. Dollar getting beat up pretty good here, down 43, 75.95. Again, the yield gap will increase as the U.S. continues to fight the recessionary woes here. Another possible 50 to 75 basis point rate cut by the Fed, probably at or before the March 18th FOMC meeting. Looking at 50 right now, probably about a 25% chance of 75 basis points. Again, that will put us right down where the Swiss franc is, below the Swiss franc. So again, carry traders may be looking to short the dollar even further. Down 43 as we speak. Looking at the euro, euro up 72. Right, favorable comments here out of France by Governor of the Bank of France, Christian Noyer, suggesting that there's a good cause for optimism for economic growth in the Eurozone. So again, putting a little positive light on the euro, all right, staying at 4%. Will they cut? We'll have to see here later on. Carry traders not doing much. There was concerns about Barclays Bank earlier on and further write-downs emanating there along with Credit Suisse, but higher metal prices have sort of put that towards the sideline here with higher equity prices. Right now, Japanese yen up 9 as we speak, 93.17, just up 9. Again, carry traders still active. Again, they were taking risk off the table earlier. Looking at the Swiss franc currently trading at, down 8 right now, 91.51, down 8. News out of China that there may be another increase in the one-year lending rate to about 7.47% after the CPI rose up to 7.1% in January year-to-date versus December 6.5%. That about covers it for the currency outlook here. Again, higher equity prices here opening up, and that may help the dollar a little earlier on, but we shall see. All right, Caitlin, thank you very much for the opportunity. Listeners, have a good trading day. Thank you very much.
Thank you, Bob. That's all for your AM Forex New York. I'm Caitlin Sisney. Join us again later for another update right here on ForexTV.com.